What is spurring growth in this sector right now?
I think it's for the first part, it's very great that we're finally back in the green. We've been tracking the data for about 3 years now, and it has been consistently back-to-back negative quarters. What is interesting or important to note is that the Nigerian Bureau of Statistics tracks the real estate service sector and not the direct property market. So the growth that we're seeing now is more reflective of the performance that the real estate companies are seeing in the industry. Important to also add is that I think over the past few years, historically, the first quarter is always the best performing. So from 2014 down up until 2017, the first quarter has always performed the best in the year. And that's what we're just seeing come back to bear.
But what really is driving that good performance in the first quarter?
I mean, people are going to say it's market sentiment, that because of elections, things are starting to pick up back after. But I think the bigger thing to note is that things are just starting to move things are starting to move because sentiment is improving.
Yeah, but when you see the numbers around the housing deficit in Nigeria, I know there's many arguments around, is it 70 million, is it 20 million, or thereabout. But we all know it's still staggering, whatever the figure is. But I'd like you to speak to the opportunity in that.
Sure. I think when we talk about the housing deficit, it's a number that's been thrown around for over 10 years. So I even avoid speaking on that number specifically. But what you find in terms of the opportunity in the market is in the residential space, where you have the larger volume of customers. So historically, people have been focusing on the larger unit sizes, the luxury apartments, but now you're seeing a lot more people focusing on the smaller units, the one bedrooms, where there's a larger serviceable market. So that's where people are seeing the opportunity, and that's where you're seeing quite a lot of the real estate developers focus in their new investments.
But when you look at locations, though, let's look at Lagos, for example, now,
Sure.
where are we seeing more value?
Sure, it's definitely along the Lekki axis. People are not focusing on the core areas anymore. So people are spreading out their tentacles, so to speak, and going down the corridor.
But I read a report from Broll Agency about that for last quarter. They're talking about the fact that vacancy rates in A-grade buildings are still really down about 54%.
Sure. When you're looking at the vacancy of grade A properties, and when you're focused, that report would focus more on the prime properties, so that's in Ikoyi and Victoria Island. What you see is that only a few properties are getting those tenants. The main driver for activity in the office market is relocations. So it's not new companies coming into the country that are getting space. It's companies who are moving from one building to another. So what you're finding now is that there are a few key properties that are starting to fill up. Heritage Place, for example, on Kingsway Road, has seen very good occupancy with lots of international tenants. But there's still a couple of new buildings that have been delivered that are still with very low vacancy rates.
But would you say pricing also plays a part in this as well?
I think pricing definitely plays a part. There are only a few companies that can actually afford that type of space, but the pricing has adjusted quite significantly over the past 4 years. I mean, in 2013 or 2014, you'd be seeing people quote rates of $1,000 per square meter. But right now in this market, you're looking at 500, 600, even for the typical average good building.
Okay, what about occupancy rates in the retail space, where you're looking at the malls as well?
Sure. Within the retail space, I think the vacancy or occupancy levels, they vary significantly when you look at the core markets and the second-tier markets. So in the core markets like Lagos and Abuja, let's even just say Lagos, you have good occupancy rates of about 90% and above. And this is in the really big malls. You're talking about the Palms, Ikeja City Mall. When you look at the smaller malls like Maryland Mall, it might vary slightly. But when you go to the second-tier cities and you're looking at, say, Palms, Ilorin, or you're looking at a mall in Port Harcourt or another one in Owerri, the vacancy rates are quite less. But there's still, even with that, there's still a lot of activity currently ongoing in terms of retail development. Right now, there's a small plaza under construction in Ikoyi. The Ogun State government is sponsoring a retail development in Abeokuta.
But when you look at all those developments and then look at the size, for example, Lagos, we have a population of about 20 million people, and you look at the amount of size of malls, the number of malls we have in Lagos is still underserved.
Yeah, it's still underserved when you're comparing it to some more established markets. But the thing that we should always avoid doing is just looking at, say, retail space per capita, but not looking at the income level per capita. So when you look at South Africa, which has a very large amount of retail space, the income levels can support that type of development, even though they are getting to its peak. But right now, the income levels in this country can't really support those type of malls, and the tenants who are in those malls are finding it hard to pay, especially because they're collecting income in Naira and have to pay dollar-denominated rents.
Interesting you mentioned that, because it kind of takes me back to the residential property, and I'm still brings up the whole question about affordable housing. You know, and are we seeing developers being more innovative in trying to get more affordable structures out there so that more people can play in that space?
Yes, no, I think finally people are actually starting to open up to the idea that, look, we need to figure out how to please the consumer. I think some of it is tech inclined, some of it is just people trying to be creative. So you find to get that affordability, people are either trying to allow people pay monthly, they're trying to figure out how to do integrated costing, so that if you are renting an apartment, you're paying an all-in cost, so you don't have to worry about all these other elements. People want to make modular housing or make the units much smaller to allow you at least save costs, because what we're seeing with this generation, at least the younger generation, is that people are willing to trade size for proximity. So I'd rather live in a very tiny apartment, but as long as I'm close to town, I'll be fine, as opposed to living in a very big apartment that's 10 kilometers away from where I need to be.
All right, then. Thank you so much for your time on this.